We're live
We're live and alive.
and alive to talk about something very close to us,
Uh-huh.
something that will affect us personally
Yeah.
and potentially many viewers, which is the current state of the insurance industry.
In California.
We're going to talk about California. However, these are national companies.
Yes.
So, but it's an interesting time to say the least. Now, you've been in the insurance industry for how long?
40 years.
Okay. So you can shed some light.
A little bit. I'm learning every day because the insurance industry is vibrant and is changing constantly. So being 40 years doesn't mean well, it means something,
You've seen different
different things.
different
But,
times.
if you don't stay up to date and this and that,
Absolutely.
you're out of the game.
We also have friends that have been in the industry even longer, and they said they've never seen anything like what's happening right now.
No, this is absolutely unprecedented.
So maybe we can start with farmers just announced they're laying off 11% of their workforce.
2,400 employees
Farmers insurance.
across the board.
Not
It's
to
not
be
just sales, or they're gonna knock out underwriters, claims adjusters. I mean, across the board. It's my understanding.
and this comes at the same time of companies pulling out completely from writing new business
In California.
in California and other states.
Yes.
And
Farmers just pulled out from Florida.
okay,
And we just did it because, for example, the announcement, I think, of the Florida thing is a month old now.
okay,
Okay,
and,
but it seems like yesterday. But I think it's over a month.
and we'll link in the description. But I'm looking at an article from August 29th that farmers to do this layoff of 2,400 workers.
Yes.
So, what do you think is going to happen? This is just your opinion based on your experience. Where do you think the future is for the insurance industry? Let's say affecting agencies, so people who are insurance agents, insurance owners, and then affecting your day-to-day person that buys insurance and needs insurance, because in California it's a law to have insurance if you have a vehicle, right? And then
Oh, yeah.
if you're operating a vehicle, and then also in California it's a law to have it's not a law, but it's required by the lender if you
Buying a house.
if you're buying a house.
So first of all, let me say this. What's happening, it's happening throughout the United States, in many states. Florida is being affected heavily, okay? But let me say that I don't think that people realize how vast insurance companies are intermeshed into the economies
Yeah.
of every state. Okay? This is going to affect every single one of us, without a doubt. It doesn't matter if you own a property, if you rent a property, because you have renter's insurance, you have homeowners insurance, and I'm here to tell you today, all these policies are going to go up in price. Okay? And we don't want to be alarmists, right? We're always telling everybody of our viewers we're positive people, okay? And we are. So we're going to give some really good pointers today, okay? But we're also realists, And the fact of the matter is that we have a lot of wildfires that have increased the risk you can't be at 130% or 110 or 125 over your revenue and sustain that business model and stay alive.
So basically, you're saying the insurance companies, Farmers, State Farm, Mercury, Allstate, all these big companies, Progressive, they are
Losing
a business which is losing money now because they're paying out more than they're receiving.
Correct.
And so they are saying, hey, we're either gonna stop, we're gonna leave the state, we're gonna stop writing business because we're losing money.
Right. So let's try to have some kind of a format here so that we cover a lot of points. So we talked about farmers, they're laying off, okay? State Farm Insurance, okay, has stopped writing property insurance in California, homeowners insurance, okay? And so has Allstate Insurance, okay? Now, those two alone make 22% or 23% of the market share in California. So that is a huge piece of news,
Yeah.
okay? Now, all of a sudden, we're also in real estate. So all of a sudden, the real estate people are becoming very concerned because you've recently had, deals fall apart because of the high interest rate. Now you couple the fact that you may not be able to get insurance in, for example, mountainous areas or far away areas that may be exposed to fire.
Yeah.
You've got so now
Or the cost of the insurance.
The cost of the
is
insurance.
like it's cost prohibitive from buying that property that's
Correct.
maybe in a brush mountainous area.
Correct. And in the old days, not too long ago, insurance was not even on the radar.
It was the last thing before closing escrow.
I would get phone calls. I kid you not. Well, I'm not proud of this, but I haven't written a policy in a long time. But our staff would get phone calls saying, hey, you know what? My escrow is closing today. I need an insurance policy. Okay? Everybody else, title, loan, realtor, financing, whatever, disclosure, everybody else has been with that escrow right along, and then insurance was the last thing that they got. So one of the first tips that I can give the public is, if you're thinking of buying a house, if you're thinking of moving, if you're going to need it, whether it's homeowners or renters insurance or whatever, call right away and try to get a quote and see what's the availability for you to get insurance for that particular property. If you're in a fire hazard zone, okay,
Yeah.
you may find that it potentially can be a challenge. Okay?
One of this issue is that you went from having 20 different options as a consumer to it's dwindling down and down and down because companies, huge companies, are backing out.
They're either leaving the state or they're stopping their issuing of policies in the state. Or another thing that the companies are doing is they're tightening their underwriting guidelines so much that
It's the equivalent of saying we're closing down.
Yeah, they're tightening so much that you can get maybe I don't know, out of 100 you get 10 if you're lucky, And then the other day I was telling somebody, a family member of mine, go sell some policies, And as he was walking out, he was saying, give me companies that I can, I'll sell. Give me companies that I can
That will take the
give
business
to the clients and we'll take the business and we can help the clients.
It reminds me of, and we'll get back, not to sidetrack too much, but it reminds me, I was in the life insurance industry, and when the pandemic came, they basically only were accepting the cream of the crop, the healthiest of people, no prescriptions, the company I was representing. So pretty much like 1 out of 10 people were able to get covered. Now, what we're talking about when we're saying the insurance industry, we're talking about the property and casualty, which is homeowners. We're not talking about the life insurance industry.
No, not in this case.
In this case.
But let me give you a scenario. So traditionally, the insurance department the insurance commissioner can control quite a bit of the business structure for an insurance company, even to the point that they tell you how much money you can make. I think it's 15%. You can't, that number is
It's the
there.
California Department of Insurance. They
Commission.
regulate.
The insurance commissioner they rate the Department of Insurance has tremendous regulation over the insurance industry.
Companies.
Yes, in California. Okay? Admitted companies. So admitted companies in the state. Okay, you have to apply, and there's a process for it and all this stuff.
All
We
the
don't
big
want to get
names.
into that.
All the big names.
Right. So Prop 103 came by and provided a lot of regulation, which I'll get into quickly. But just so that everybody gets an idea, State Farm has applied for a 20% increase. Travelers, 19% increase. Progressive, 19% increase. Geico on the remaining policies, because Geico left the state, 20%. Allstate, 44%. Hartford, 18%. Okay? And this is going to affect all of us because insurance companies employ a tremendous amount of people throughout the state, and that is the like in every single state. Insurance companies are huge, and they employ a ton of people. You know? You have insurance agencies like ours, we have staff, you have bigger companies, you've got underwriters, you've got actuaries, you've got claims adjusters, attorneys, you've got salespeople. So that's what I meant when I said I don't know that people realize to what extent the insurance companies are enmeshed in the economy of every state. So if we don't resolve this problem.
Yes, and I want to talk about also because insurance companies collect a pool of funds and then they go and invest these funds.
Right.
So they're very active also in real estate investments.
Yeah, sure.
So if an insurance company goes down, what happens to their real estate investment?
Correct.
Or not goes down, but is in a difficult situation. But when you said all of those companies are taking rate increases or they're requesting with the Department of Insurance, the commissioner, to have an increase, this is only on the existing policies that they already have on the books, not new clients.
Well, it depends. If they're writing business, yeah, but if they're not, and you have to implement this, so you need to realize this doesn't get accepted. Even if the insurance department accepts it, you don't get the increase like right now.
Right.
The increase is provided when the policies renew. And in the case of homeowners, that increase perceivably it's going to take a year. So this is the kind of stuff that the public may not be aware of completely. For auto, a lot of the auto policies are every 6 months, so that's a shortened period. But let me say this about what we just talked about. These are unprecedented requests because traditionally, the magic number was that 6.99% increase. And the reason why every company would ask for that is because you didn't have to go through a hearing. Anything over 6.99, you have to have a hearing, okay? And that entails a whole mess of other things. And you have to, I believe, open your books. You have to show this, that, whatever. And that potentially could have taken, a year or 2 years easily, okay? So the magic number used to be 6.99. Now, what's happened is that when companies like State Farm and Allstate and Progressive and all these guys that say, hey, you know what, we're going to stop writing business because we cannot afford to take on more risk because we're already tapped out. And if something big happens, we are going to go under. We will become insolvent. So the insurance commissioner saw this and said, okay, there was an exit of many carriers. And they said, tell us what you need, okay, to continue to do business in California because the pool of companies is decreasing.
Right.
So these increases are unprecedented. I mean, as much as I know, okay? The magic number, again, was always that, 6.99, okay?
Is it true that the reason that these companies are struggling with the revenue and they have so many losses, part of it is the fires.
Yes.
But part of it in California is also during the pandemic, insurance companies were not allowed to get a rate increase.
Well, they were depressed. So that's correct. Yeah.
It was frozen. So all rates, because typically it was normal every year, couple years, your insurance premiums go up.
Yes.
For a consumer.
Yeah, but now they're skyrocketing.
As a matter of fact, remember during the pandemic, insurance companies were forced to pay back some money for the car insurance,
right?
Because there weren't as many losses
No, people weren't driving. So one of the other factors that the public may not be completely aware of, okay, is the fact that reinsurance costs have gone through the roof.
Can you
Okay,
explain reinsurance?
reinsurance is the insurance that insurance companies buy to offset the claims on major catastrophes, okay, like wildfires. Okay, now the reinsurance carriers are not regulated by the Department of Insurance, so they can do pretty much whatever they want. And in the last year or so, a couple of years, the premiums for reinsurance have gone through the roof. They've gone up between 30 to 50%. So that's additional cost to the insurance carriers that we normally work with. Okay? Because nobody can take a hit on a wildfire like the ones we've had in California. We've had plenty, and survive it. That's why we need carriers to stay, so that we have a pool of companies, and these companies evaluate the risk in certain areas, and they say, I can still take this much here, I can still take this much here.
Because those are more like catastrophic events, right?
Correct. Yeah.
So you're talking about, you're not just talking about one house that unfortunately burns on fire,
Well,
catches
no.
fire. You're talking about potentially blocks.
Yeah,
of
because when you
properties.
have a wildfire that's out of control, you don't just get one house, unfortunately, that burns down. I wish that was the case. But you get a ton of them.
Yeah.
But the point that we need to send out is that we are all in this mess together.
Yeah.
It's not the insurance companies versus the public.
No.
We're all here. We're all going to get hurt.
Yeah.
Okay? If we don't find a solution, everybody is going to get hurt, because the level of insurance companies are strong. They're part of a very vibrant economy, and now you got realtors really worried, because now you've got issues obtaining policies.
Can
So-
you imagine? That's almost unheard of, right? Because and even in a last case scenario, if all you needed was the most basic of insurances, which was maybe like a California Fair Plan, a fire insurance, now sometimes that's the only option, from what I understand.
Right. And then one point that I want to make is that it's my understanding that the cost for reinsurance, the insurance commissioner does not allow insurance companies, okay, to put that cost into the filing. So the reinsurers are not regulated by the insurance commissioner. Their rates can go through the roof, and they have, but we can't take that premium and adjust it and put it into the filings. I believe Prop 103 did away or did not allow that to happen, and Prop 103 has been here for decades. Okay?
Yeah.
So that's one thing that is out there that, it's, I don't think is that common knowledge. Okay? But what can the public do? Okay? To, go through this wave until the powers that be figure out what's the best way to handle this. So what I would suggest is pay your premiums on time. The minute you get that renewal, pay it in full completely. Don't let that policy lapse, okay? Especially if you're with State Farm or Allstate. Make your premiums on time. Pay them completely. Because in the case of State Farm and Allstate, if you lose that policy, okay, you most likely will not be able to get a new policy with those carriers.
Paying it completely.
Or whatever you can.
Most
Just-
people pay monthly.
Okay,
I would
so
imagine.
make sure that you religiously pay your premiums.
Don't let it cancel.
Don't let it cancel. Call the care. Don't assume that you put a check in the mail and it got there. Don't assume that.
Yeah.
If you can, pay it by phone.
Don't pay in with checks anymore.
Get confirmation numbers.
Yeah.
If you want to pay with checks, go directly to the agency, drop it off in the agency. So that's one thing that I would tell the public.
Yeah.
Okay? The other thing is, if you get a renewal notice and it's skyrocketed because I can give you many examples of policies that, were costing, let's say, between $1,800 and $2,000 a year 2 years ago for $1 million house average. Now, potentially, they're going to have to pay between $10,000 and $15,000 for the same houses. So you're talking about a huge hit for the consumer. Okay? So the minute you get your renewal, shop around. Call everybody and their mother and see what kind of rate you can get. Okay?
Mm-hmm.
So be very proactive with this.
And to add to that, don't cancel the existing policy until you have a new policy already active, and let your agent guide you on that, because even if you have a policy active, the insurance company many times sends out an inspector, and if the inspector goes out and finds something and you already canceled the other one, and it could be a mess.
Yes.
So be very careful.
So if you get a notice that says, hey, we're going to non-renew you for this, and that, try to remedy that.
Yeah.
If you got a tree that's, the branches are close to the roof line, cut them immediately. If you've got, widen a fire zone by bringing in additional gravel to protect, the fire from jumping,
right,
do it if you can, because the other side is, if you lose that policy, now you're going to have to apply as a new customer to another company, and everybody's going to take a hit. Everybody.
Yeah.
So those renewals are precious. Okay? Another thing is that the public may not know is, keep calling the company that you're insured with, because you might not qualify this week for a renewal, but you know what? You might get an underwriter that looks at the entire picture slightly differently the following week or 2 weeks later, and they might give you a renewal.
Yeah.
Because look, everybody that works for insurance companies, they all have a heart. They want to help the public because they know we're in this mess together. Okay? And another thing that I would say is, I know it's difficult, but when you talk to an underwriter, if you're able to get through to an underwriter, when you talk to staff, be kind, because we want to help. We are unfortunately dependent on what happens with the carriers that we represent, okay? It's not personal. We want to help. If you talk to my staff or anybody that I know many insurance agents, all their staff are wonderful, and they want to help people. They do.
Yeah.
But so you beat them up on the phone, and
I think that goes for anything.
You call them ugly names and this and that. And so, it's going to make it difficult. And, the staff is the ones that's taking all the bruising, all the beating up, all the getting hit over the head with a 2x4. They have to listen to these things. I don't have enough money to do this, and things can get out of hand. So the minute we take it personal and we get upset, we lose. That's one of the 48 laws of power. We're going to lose. So, I know it's difficult.
It's hard to. I mean, if you went from $2,000 a
to
year
to 15,000,
I don't know how you're going to be kind.
I know.
But I hear what you're saying.
I
Try
know.
to put yourself. It's not the person that you're calling. It's the insurance carrier, which there's something that maybe we should just explain. The insurance agent is not the insurance company.
No.
So there is the insurance agent and agency and staff represent the insurance company, and they write business for the insurance company, but the insurance company is the one that's has to make these rate changes, has to pull out of the state, has to make these adjustments for X or Y reason on writing less business, and the messenger is the insurance agency.
Oh yeah.
And don't kill the messenger. Don't
kill the messenger, please. I know it's difficult to do, and there'll be a lot of your blood pressure go through the roof. you're paying $1,800 for a policy and you get a renewal for 10 grand or
Yeah.
something like that. I mean,
Crazy.
it's crazy. But, you know, now if you hear this podcast or if you're reading some articles out there and stuff like that, now you realize we're all in this mess together.
Oh yeah.
Okay? So the other thing so you know, pay your renewal, pay on time, make sure you're religiously doing that, call around, get other quotes.
Right,
There's
right,
things that you can do. You can increase your deductible so that your price goes down. That's not fun, but I mean, there's stuff that can be done, and call your agent. Your agent can help you try to figure things out.
A good agent will walk them through, hey, you can do this and that.
Right. So what's happening now is that if you lose the policy that you have today and you have to get a new policy, potentially the new policy is not going to be as generous in coverage as the old policy that you've had for 10, 15 years.
Mm-hmm.
Because those policies were a little bit more rich in benefits than the newer policies are.
Right.
Okay? Especially if you end up in a place called California Fair Plan. Okay? Now, I'm not putting California Fair Plan down, but it's just the insurance of last resort, so to speak. Because California Fair Plan is basic coverage. You know, they cover you for fire, but for example, they don't cover down trees, they don't cover theft, they don't cover liability, they don't cover bursting of pipes, where the other policy that you had
Maybe would have.
with a captive carrier or an independent carrier could have. If they're more comprehensive the older they are. So that's why I'm telling the public,
Right.
try to renew. And by the way, I believe that California Fair Plan is asking for like a 50% increase or something like that.
Wow.
Their policies have more than tripled. Okay?
They used to be super inexpensive. Now,
Correct.
I mean, I remember, now this is, I mean, well, maybe 15 years ago or something, but I remember seeing homeowners insurance policies like $270 a year.
Yeah, that's
with California Fair Plan. But one thing that's happening with Fair Plan, we have friends in the industry, you're in the industry, they're doing wraparound policies, DIC, difference in conditions. So they're bundling two types of policies together to provide at least a better coverage.
correct.
So they're not only left with a Fair
That's
Plan.
an excellent point. Actually, that was the next one, so you just covered.
And to be clear, we're not being specific on, because really only your agent will know exactly what your coverage is and what's covered and not. So do your homework, whoever's listening, and talk to your agent, find out, what's covered. Because these are our opinions. This is what we're sharing in the state of California. But
Well, for example, Florida is going through a tremendous, upheaval also in insurance.
oh yeah,
So their policies are going through the roof. I was reading an article where a lady was paying, I think, around $1,100, and then it went up to $1,800, and then now she got a renewal for $10,000. And if you look at the description of the house in the article, is just a 3-bedroom, 2-bath home. So I don't know if it's the location. It has to be where the location is. Maybe you got flooding. Maybe you got this, but that policy doesn't cover flooding. So, there's a lot of stuff going on.
oh yeah,
You just have to be involved. For example, there's something else that we can share with the public. For example, homeowner policies stopped covering flood insurance in the 60s because there was flooding and this and that. So they say, okay, you know what? We're not going to cover flood. So now you're going to have your own flood policy. Then we had the Northridge earthquake in 1994, and then homeowner policies did not cover earthquake within the policy anymore. Now you have a separate earthquake policy.
oh, is that when it
Yes.
broke up?
And then in 9/11,
And we're talking California.
well, yeah, but pretty
California.
much throughout the
Well, Northridge is California.
yes. And then we had 9/11,
Right.
and a lot of the policies that covered terrorism said, hey, you know what? We're not going to cover terrorism anymore.
Excluded.
So now terrorism is excluded. So now you need to get additional coverage for something else.
Yeah. As these things happen, insurance companies say, "Hey, we're not gonna cover that."
Right. So, and these are my opinions, people. If I make a mistake here or there, it's not intentional. I'm just trying to tell the public, look, there's some things that you can do, because I've been reading and hearing a lot of stuff, and it's very alarming. But let's tell the public what they can do. And a lot of people in a lot of podcasts are doing it. But pay your renewals, make sure you're on time.
Let me say this: somebody, because they know I'm connected to the insurance industry. I'm no longer in the insurance industry, but somebody sent me a video of a good buddy about these two guys talking online on a podcast, and they were saying all of these insurance companies are leaving the state, not writing your business, trying to cancel policies. Do they know that something's going to occur that the public doesn't? Almost like saying like insurance companies knew a catastrophe is going to happen. That's what they were insinuating. And then it made me think, they're just, this is really good that we're talking about the insurance industry, because maybe they didn't have that information. They really don't know what's going on, why these insurance companies are doing this. It's at the end of the day, it's money. They're losing money. Any business that loses money is going to have to adjust, close their doors, whatever the case. And so I just thought it was funny that they were saying, do they know that something's going to happen, a catastrophe that the public doesn't?
I'll tell you what, we're gonna have fires. We know that fires are going to happen.
Yeah.
And they've been pretty much devastating every time there's one of them. And so insurance companies are scared.
Yeah.
Because if you are overextended in a particular area, see, these studies are now more concise and comprehensive than they have ever been before. You had companies that were writing business, and enjoying the huge amounts of business that were coming in, but they were not completely aware of, the devastation that their bottom line could take if, one mountain with 300 homes, get a wildfire comes, it gets burned down, and then there's one carrier. I remember a long time ago, I used to target developers. And I would go to a developer and make a good presentation. And in that development, I would probably pick up 30 to 40 homes. And I would be able to write them without any problems.
Right.
Now, if that development of 300 homes or whatever burned down, those 30 or 40 homes could potentially cost millions upon millions to the carrier. I had no idea, none whatsoever. All I wanted to do was cover the clients, develop a relationship, get the policies going, and in that situation, the developers like me, we go into other lines of business and so forth and so on. I had way back then, it's only as of things got rolling out, like the fires, they were devastating, this and that. Well, the claims, you have reserves. How do the reserves get affected? And, it's now these studies are very comprehensive.
More transparent, more.
Yeah.
Now, it's not the first time that insurance companies, stop writing a particular line of business. It's not the first time. We saw it with captive companies that we were involved with that stopped writing auto insurance. And we have a good friend that was the number one auto writer of that company. He said, you're not going to write auto insurance. I'm leaving that company.
It's crazy.
We also know captive companies, we're talking 20 years ago, maybe 15 years ago, that stopped writing homeowners insurance. So the reason they did is they were overexposed, right? So it's not the first time that companies make adjustments like this, but it is the first time, it seems, that they're not just saying, hey, we're going to stop writing this line of business and we have other options. The other options are not there. We're just not going to write new business.
Well, that
We're just going to hold on to what we have, and that's it.
That's right. And even some carriers are non-renewing policies in certain areas. So
Yeah.
you get a non-renewal, and that's why I'm telling the public, call your company, find out if there's anything you can do to save
Right,
that
right.
policy.
Yeah.
Make your premium, change something. Maybe they'll consider it if the deductible is higher. Maybe they'll consider it if you take off X amount of, whatever. Try to save it.
Right.
We're in this mess together. It's, as I was preparing for this podcast, I came across a figure that, apparently the wildfires in California, companies have paid over $40 billion in damages. And that's a lot of money. When I saw that figure, I was taken aback a little bit. Over $40 billion. The wildfires, everybody, we can throw stones at each other all day long. We can go from forest mismanagement, utilities, some were negligent. We got a drought. The underbrush, we have a tremendous amount of underbrush. So, we got labor shortages to deal with these issues. We've got inflation. There's a tremendous amount of trees that are dying. So all this, it's not just one thing, It's just a compilation of things that create this situation.
The perfect storm.
Yeah, the perfect storm. So, we need to figure out a way, because the fact that State Farm and Allstate and Geico and several other carriers like Progressive, none of these guys are, are writing homeowners. It's not a good thing, because the pool of company diminishes.
Right.
And then the public has less options.
And that usually means the premium goes up.
Yes, and so what potentially can happen, is that we end up in the non-standard or the surplus lines market. Now, non-standard and surplus lines market are not admitted carriers. So they're not regulated by the insurance commissioner, by the Department of Insurance. Normally, these policies are less robust, not as much coverage, But what will happen there too is, if the admitted carriers, if the competition to the non-standards in the surplus markets is not there from the admitted carriers, potentially these things will go through the roof and become also an impossibility for the public to purchase. So no matter how we figure it out, we need to do it together.
Yeah.
I don't know what the answer is, but I would imagine that, the insurance commissioner now is saying, hey, what is it that you need to be able to, what kind of an increase do you need to take in order to be able to stay in the state and be viable?
Right.
And hopefully it's not too late. We can get some carriers maybe to come back.
That's what it
open
seems
up
that's
with
happening.
State Farm, Allstate, because we need the competition, guys.
It
We
seems-
need this competition in order to survive. I'm sorry, go ahead.
No, it seems that the state now wants these companies to come back, because they realize the companies just saying, hey, I'm done doing business here, is not a good thing for the public.
It's not a good thing.
I like your opinion on it too, that you're saying try and weather this storm by talking to your agency and making adjustments to your policy, keeping your policy no matter what. Try to weather this storm. Eventually, we'll get out of it.
We'll get out of it. Yeah.
But this, it seems that it was caused by a combination of a lot of things. But it seems like, correct me if I'm wrong, maybe, but it seems like the pandemic freezing the rates for 3 years didn't allow the insurance companies to make those adjustments needed. And so they were taking losses.
Well, that has precipitated this situation.
Yeah.
Okay? And I don't know how we're going to fix it. Because, there are people out there that say, hey, you know what? The insurance commission is an elected post now. So they're politicians.
Right.
What politician is going to sign off on something to say, hey, we're going to increase the rates? They're never going to get reelected again. So, we've gone into, and I'm not going to take any sides on this, but because I don't know enough, okay? I'm doing too many things. I'm not an actuarial. I'm not into this 350%. Maybe I should be, but I'm not. I don't know enough to figure out what the answer is. We need a group of people to come together and try to figure out how this thing can be saved.
Yeah.
But now you're dealing with a politician, not a technician. A technician is going to look at the data and say, hey, we need this, 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 this. By not allowing this, these companies are going to leave, this and that. So, I'm not.
Yeah, and also
Don't want to get into the politics of it, but politics is also involved in
Yes.
this, to a major
I remember
extent.
going to these town hall, these meetings, and I remember them saying, "Hey, make sure that you send this letter to this congressman or
councilman and
councilman,
yeah.
because they're more in favor of this or that." So the insurance companies and the politicians, have always tried to do the dance.
Yeah.
But it's an interesting time right now, and
We're all going to get hurt. If we can't resolve it, we're all going down.
yeah,
And when I say we all are, I'm talking about the public, the insurance carriers, the administration, insurance commission. It would be somewhat chaos. Because, well, look, you know what's happening right now? I've talked, and this will set the stage for a lot of people. I know a few people that have their homes paid off completely. The renewals that they have received are so outrageous that they are choosing to self-insure and not get any insurance whatsoever.
wow,
And that goes again. I've been in the insurance business for 40 years, Mike. And I always been ingrained by all the classes and seminars that I've taken. It's in my DNA. Get insurance so that I can help you and the company can help you with a loss in case something were to happen.
right.
And now you've got people self-insuring, and I'm looking at them and I'm thinking,
It's not that bad an idea.
no,
That's what I'm thinking.
I want to tell them you got to get insurance somehow, but
But if
they're
the
facing
premium-
a $15,000 premium, a $10,000 premium from 2,500 from 2,000, and even that was climbing.
Yeah, I mean-
so how do they do it?
If they have their house paid off and they got money in the bank, I'm not recommending this.
Don't do it. Don't
but-
recommend that because
But-
that's not a good idea.
But if your insurance premium is $15,000 a year,
Okay, then you have to look for another carrier that will insure you for less.
yeah,
The recommendation is not to go without insurance.
It's
God
not to
forbid
self-insure.
something happens.
but some people do self-insure, is what
Well,
you're saying, and they feel that
I'm
that's
talking to some people that their homes are paid off and they're living because $1 million house today in California, what is the average mean house? I think
yeah, but it's the cost to rebuild the house.
it's the cost to rebuild the
not,
house.
not what people will pay for the house.
Not what people
That's
would-
I remember. I mean, you would get that call all the time. I just bought my house for
right.
500,000, but why is the reconstruction cost
Well, it
way
depends on the amenities that you have in the property.
right?
Because I remember walking to a house in the city of Arcadia one time, and the first 6 feet by 20 feet was jade imported from Taiwan. Now, who walks on jade? But he had imported the jade from Taiwan or Hong Kong. Anyway, it was an incredible. So you took
Yeah.
off your shoes to walk on that.
You better take them off for that.
No doubt, but the first 20 feet of that entrance was worth I think 1.5 million or $1 million bucks. And so
Crazy.
that I had severely underinsured that property, And when I walked in there and I saw that, and so you've got fire mantles that are made out of ivory that
Right.
you can no longer replace. They're irreplaceable and they're also priceless. So when you're talking to somebody that collects antiques, and some of the antiques are part of the structure of the property. Now you're in. Now you're going to pay $100,000 for a homeowner policy.
Yeah. Yeah.
Okay, so
Wow.
every individual is a different case. But what I'm telling you is that the staff that works for all these insurance agencies, they're feeling the pain and they want to help and they want to take care of the public, okay? And so within all of this, in as much as we possibly can, let's remember that we're all human beings in this together. Yeah. And I know a ton of insurance agents because I've been in the business for 40 years, and every single one of them is trying to do something good. You know,
Yeah.
I know you have nothing is perfect in life. You know,
Sure.
you have some that may not give a
Bad
darn.
apples.
Yeah, you got in every field,
In
you know.
everything. Yeah.
You know, but for the most part,
yeah.
you know,
At least the people we try to associate with, the
Well,
people
yeah, but-
you've tried to associate with.
yeah.
know.
But in general, you know, you go to meetings and stuff like that, and
Yeah.
I just went to a meeting in Rancho, and the agents there was a meeting, and there was like, I don't know, 50, 60 agents, I don't know how many, but every single one of them was concerned.
Sure.
Uh,
The morale maybe is.
genuinely concerned for clients. The idea was, hey, this client's calling up. I can't place him over here. What's going on? This and that. And, you know,
Yeah.
they're humans. They care. And if you go with that attitude, you're going to find a way to resolve whatever problem you've got. You know, you're just going to have to work a little harder than before because, you know, the options have decreased.
Yeah.
And we're all in this together, guys
I
and
think
ladies.
no, that's a real good explanation. I think we're going to continue to see more of these news more of these things happening where
Yeah.
insurance carriers are laying people off, and that's going to continue to happen until we weather it.
Yeah.
And so, but I think that's a really good explanation
But
of
there's
where we're at.
there's things
you know?
that you can do.
Yeah.
Okay, and that's the message here.
No, you made that clear. You made it clear, and I think that's the positive side.
Yeah.
You know, that hey, don't lose hope. However, this is what's happening.
Yeah, we're gonna have to work a little harder to find a solution. It may not be a permanent one until, you know, things get sorted out, and hopefully,
Yeah.
you know, maybe we can see prices fall down the line sometime. You know,
Who knows?
let's see what happens, Mike.
Anything else you want to throw in?
No, this
Cool.
is it.
Thank you.
All
That's
right.
good.
I hope it helps people out there.